Hey everybody, welcome back to another stock spotlight of the week. This week I'll be featuring the company Uber. Now, there are lots of reasons why I'm featuring the stock today, but for those of you that don't know Uber, I want to give you a quick overview of what the company is like. Firstly, Uber has three main services: their ride business, their eats business, and there's also its freight business. Uber is mostly known for its ride business, and this has been a very popular alternative to taxis because you have drivers, personal drivers just like me, working for this company, and then I drive my customers to their location at a cheaper and affordable prices. And secondly, their Uber Eats business is a super popular food delivery service, meaning customers could order food and then the driver would just pick up the food from the restaurant and then bring the food to your house at a delivery cost. And lastly, their Uber Freight business is actually pretty underrated and not as well known as Uber Eats and Ride. And what that does is it transports supply goods from companies to companies. So those are the three main services that Uber provides. This company has been around for about at least 5 years now, so it's still relatively new. And in this video, I'm going to go over its management, its balance sheet, income statement, short-term and long-term potential. So let's start off with the management section. Here we go. When we talk about management, we have to talk about the first previous owner, and that's Travis Kalanick, who really tarnished Uber's image in a few ways. One specifically is the situation with employees, employee relations through sexual harassment towards passengers as well as coworkers itself. And since that was exposed, that really hurt Uber's work culture as well as the face of Uber's image as well. Now, another famous case that related to Travis Kalanick is allegedly there was a Google manager that stole self-driving data from Waymo. So Waymo is a self-driving data company, so stealing data from that company and then sending it to Uber because of what Travis Kalanick ordered and wanted to get. And so that has really made Uber into much of a really untrustable company to work with, as well as its unhealthy work culture. But now Travis Kalanick is gone. He resigned last year, and here comes the new face of Uber. His name is Dara Khosrowshahi, who is the previous Expedia CEO, having lots of experience in management, especially managing one of the world's largest travel companies, as well as great knowledge and background in engineering and finances. He doesn't have any scandals at all, so he's been someone that's really trustworthy and trying to change Uber into much of a trustworthy company to invest in and to do business in. He's actually gone through a lot of difficult, tough times. So it says here he's been a refugee in crisis around the world, in experiencing the Iranian Revolution himself. So he's got lots of experience in the challenges as in his childhood challenges. One of the biggest decisions that he's made ever since he was CEO was selling its food delivery business in India to Zomato for about $200 million. That really helps the company get more cash, as well as just surrendering that market share to Zomato, because the Uber Eats wasn't really making much profit in India anyway, so might as well sell it off for some extra cash to help during these tough times when there is not much business going on. So now with Dara managing the company, There's a lot more faith in a brighter future of the company and gaining more trust for other new investors and also current investors, making this segment a 4-star out of 5 in terms of management. Today, Uber is trading at $26 a share. Now, by looking at their financial statement, especially income statement, we get a view of how good the company has been performing in revenue as well as the expenses in the past few years. Let's first look at revenue, which I've highlighted here. In 2016 to 2019, the company has grown every single year dramatically, especially from 3.8 million to 7.9, which is almost a double, and to 11 million and 14 million, which has been still great growth. Now, despite this huge great performance of revenue, the company is actually still not profitable by looking at the net income. Now, what's the reason for that? It's because the expenses are so much higher, most likely due to the low affordability cost of rides, the delivery fee, the work wages, as well as management. And so they need to do a better job of minimizing the expenses and actually start to become a profitable company. I believe this is the year when they'll start to actually have much lower net income loss. And most likely, or maybe most hopeful, would be a break-even year where they don't earn any money or lose any money at all. That would be a huge step. As you can see, last year they've lost $8.5 million despite earning $14 million. So with all this factor in mind, that's what Uber needs to focus on starting this year, minimizing expenses and keeping the consistent revenue growth, because the market share is already there. There's already a lot of public awareness for this company. There's not much to be said about marketing anymore, because this company has really marketed itself strongly the past few years by really providing these cheap services to everyone. So with that, I'm going to give this income statement a 3-star out of 5. Now we're going to look at Uber's balance sheet. Firstly, going to be focusing on the cash. For the past few years, Uber's ability to raise cash has been very strong. Every year they've been raising more money into their company, allowing them to pay off their current liabilities. As you can see here, it went from 4 million all the way to 10 million last year, and their total assets about 31 million. But how would they do in the liability side? Well, it shows that they don't actually have any current debt, which is a very promising sign and a very relief sign when investors put faith in your company, knowing that you won't go bankrupt at any moment. Their total current liability is about 5.6 million, which is very easily paid with their cash. And this shows the power of cash, how you're able to pay it off that easily. And the total liability is almost 17 million. Now, if you compare assets to liability, that ratio is about 2 to 1. Anytime you have a company that has a 2 to 1 assets to debt ratio, that is a very attractive one to consider investing in, knowing that they're in a strong position with their assets and that their liabilities isn't what's going to be stopping them from doing businesses. So this gives them a rating of 4 out of 5 for their balance sheet. Uber in the short term is actually in a really great position compared to other companies that are closed for business during this virus period. Even though their rides business are closed down, Uber Eats has been one of the most popular businesses during this virus time. It's grown to about 2 or 3 times more sales because a lot of restaurants are only accepting delivery services. So for customers that want to eat out, that's not possible because A lot of most restaurants are closed, and the only way to eat is either cooking your own meal or ordering delivery. And Uber Eats is the number one source of delivery for food to other people's houses. So this has been a really popular choice for a lot of families and individuals during this time. Even though Uber Eats isn't a big part of Uber's business, this side business has really helped them during this time in earning some revenues instead of just being shut down and not earning any revenue at all. In the short term, they're still able to do business, which is a really great thing. And that's all you can really ask for. Not shutting down completely, but still having a good business to gain you some profit throughout the quarter. So for the short term, I'm going to give this 4 star out of 5. The most attractive part about Uber is its strong potential in a autonomous taxi industry. Right now, their main business is Uber Ride, basically having drivers giving rides to customers from place to place. But 5 years, 10 years down, there will be more electric vehicles and more self-driving autonomy data that's available to all of us. And Uber already has some years of data and experience doing that. So I feel that they or Tesla will be the number one winners in autonomous taxi industry, which will be worth multi-billions of dollars. This valuable and revolutionary service will change how jobs will be done, and this is only just the beginning of data gathering. So in the next 5 to 10 years, you'll start to see Uber really push out this type of service in providing faster service, and quick convenience to customers. Their side business will always be Uber Eats. I feel that they could really opt out of that and sell it out to another company because they aren't really earning much profit from it. A lot of customers have known about Uber Eats. If they don't earn much money from it, then it's really no point in doing it anymore. They already have market share in Uber Rides, and just opting out of Uber Eats will be a much better choice for them to really use that money to focus on Uber Rides. And also another business that I feel they should focus on is Uber Freight, a very disruptive business in transportation of supplies. There isn't a lot of company that's well known in doing that, and having Uber to do that is also making it a very underrated company in that aspect. Overall, in my opinion, Uber is a very strong stock long-term wise, especially if you're a long-term investor. And short-term wise, it's still a great winner because of its current business model, making me believe in this company to at least double or even triple its market cap in the next 5 to 10 years. So, thank you again for watching. If you have any questions about Uber, you can leave it in the comments section below, or if you have any thoughts about it, please do. Tell me reasons why you're buying it, why you're not buying Uber, or what other stocks you're buying during this time. And as always, see you later.